Hey everyone, welcome back to my channel. If you guys are into personal finance and things like gold and silver investing, please like the video, subscribe to my channel, and head on over and check out my website, My Road to Wealth and Freedom. I'll put the link below in the description. Um, Quick disclaimer, I'm not a financial advisor. Do your own research before doing anything like buying gold and silver, pursuing any of the investing strategies I discuss. Just do your own research. The channel's entertainment only. Okay, guys, thought I'd put out a video this week. We had a crazy past kind of week and a half where Archegos Capital, it's like a hedge fund, kind of blew up. It's been in the news lately. Losses. This is unconfirmed. They're talking about possibly 20 billion wiped out, maybe more. We don't really know what exposure all these other banks had to that hedge fund. So once again, it's kind of reminiscent of some of the things that we saw back in the financial crisis with the collapse of Bear Stearns and Lehman Brothers and that. My understanding is that Archegos is nowhere near as large as those institutions were, but it's pretty significant too. That coupled with that whole Wall Street bets crowd and what happened to like that Melvin Capital and what we saw with the GameStop short. Um, these hedge funds are down quite a bit. They've had some significant losses, and I wouldn't be surprised if it's kind of rocking the financial sector. Because when money like that disappears, I mean, someone has to take those losses, and we all been talking about all the money printing that's gone on over the past year. At the end of the day, that hurts. Like if you lose 20 billion and your hedge fund collapses or whatever, I'm not even sure if it's going to collapse. I'm like, everyone's kind of very hush about all this stuff. It's been in the news, but it's, no one really knows the extent of the damage because I guess the structure of that particular hedge fund was that of like a family office where they didn't necessarily have to disclose their holdings, and they found all sorts of little loopholes. But anyways, they were using these derivative contracts, and they ended up, when the bet goes the other way, bad things happen in a hurry. So again, and I guess they had a lot of leverage and just basically everything that I discuss on this channel and on my blog that I'm not doing with my own money. For that very reason, it can be very risky if you want to take those kind of bets. So I recently did my net worth report like I do every month, and I'm happy. I broke the 1.5 million mark. It's great. It's what I've been striving for, I guess, the past year. I was actually quite surprised that I hit it. Mainly because I kind of dumped a lot of my equity positions, and I've been kind of kicking myself the past few months. Man, I should have held on a bit longer, because a lot of the stocks that I owned have done pretty well, notwithstanding all the volatility that we've seen. The bank stocks in particular. So I got rid of my bank stocks in early February. So you're probably looking at, what is that, 2 months maybe? I mean, they've climbed up a little bit since I sold them. Not a whole lot, but still, right? Money's money. Then again, it could have gone the other way. Maybe the market could have melted down and stayed down, or who knows. That's kind of like this gambling mentality. And I do feel like there's a lot of gamblers out there these days. A lot of people are getting stimulus checks. Even here, I'm in Canada. Even in Canada, the government's doling out more money, for kids. And if you have kids, I forget how much they're giving you, a few $100 anyway. Plus, if you're unemployed, you're getting the stimulus money and stuff. Like, why people choose to take that money and just go gamble on, options, these like long shot stocks. I don't understand. It's kind of like what we saw in the GameStop. Now that was something that did kind of work out for I guess the little guys if they were smart enough to sell into the strength. Um, but yeah, anyway, I just feel like, if you're getting free money from the government, maybe you better, do something a bit more prudent with that money versus just recklessly throwing it away in options and on Robinhood or Wealth, like whatever, any of these trading platforms. You could do things like maybe buy some gold and silver, which gold in particular has really done horribly. It peaked last summer and it's just been spiraling. Guys are now calling, 1,500 gold. Then again, you get the opposite of that too. Other guys are calling, for 3,000 gold or 2,500 or something like that. And what I really think again, for the past kind of 6 to 8 months, I've been really kind of wrestling with these two alternative, diametrically opposed outcomes of where we're going. Either we get the big deflation or we get the big inflation. And what I'm basically seeing in the calls on the metals is essentially the same thing. There's guys who are thinking deflation, guys who are thinking inflation, and that's, their price targets for this stuff is, reflective of that. But there's also bond guys that are going on about, is this inflation or deflation? And I've been personally struggling, like, any investor, you want to try to take a long-term view of where things are really going. And, you don't want to be investing kind of by the seat of your pants there. But that said, I do think that we are in kind of like really like an extraordinary time. The last financial crisis was really bad. I think like the coming financial crisis really hasn't even started yet. I think we'll kind of maybe see how it goes over the next 6 to 9 months. Of course, the reopening, the powers that be are really counting on the reopening as being this, great savior of the economy, and jobs are going to come back, and all the people who were unable to pay their bills, for the past year will all of a sudden be good, and I've said it a million times. I'm not entirely convinced of that. In fact, last fall I was quite bullish on this whole like reopening trade. You want to own, commodities, you want to own that type of stuff, banks and stuff. Now that is literally the mainstream view. Everybody is on that trade right now. We're going to see crazy inflation. So you want to adjust your portfolio accordingly. You want to buy things that will do well in that sort of scenario. But I really think like, the precious metals should definitely be doing a lot better if that were kind of really going to be the case. And one of the things that, this lackluster kind of gold price might be indicating is that really we're going to see deflation. Because if we were going to see inflation and, high inflation and you would expect gold, should be $2,500 right now, or 2,200 or whatever, at least at or slightly above maybe the all-time high that we saw last summer. But we're kind of not seeing that. And instead we're seeing like a major kind of reversal. It's kind of bouncing along this support, 1680 to 1720 range. That said, yields have crept up. So they claim that, that's stealing away from gold. And then there's the Bitcoin thing, the stronger US dollar and all that. But I'm still not really convinced of all of this stuff. So if gold goes a little bit lower, I'll be picking up a little bit more. For now, like I said in the last video, I'm just kind of, everything's on hold. I bought enough silver and gold to hold me over. I feel like I'm in a pretty good spot. My focus now is, getting rid of debt. It's the unpopular sort of approach to finances these days. Pay off your debt. You don't really know what's going to happen. I can't imagine these people buying these like $1 million homes having like $800,000, $500,000 mortgages. Like that to me just screams outrageous risk and what's really kind of an uncertain future. Particularly if you're in between jobs or whatever. I just kind of hate to be in that situation, and I kind of don't ever want to be there. I think for a lot of people, especially like a lot of middle class people, they grew up middle class. They don't really know, what it's like to live in poverty, or that whole dimension of what happens like when you lose your home, when you lose your job and can't find another one, if you fall into that sort of structural unemployment. And I know that's kind of like a downer topic, but I'm just saying, like, there's a lot of middle class people I feel like they're living way, way, way beyond their means. And, that's not going to end well. And I just fear that, for a lot of people, it's going to be a very scarring um, period of time, what's coming. Eventually, you got to pay back these loans. And yeah, so that's kind of my spiel on that. The other thing, too, is again, like a lot, I've struggled with this deflation, inflation thing. I guess by my example, what I'm actually doing is I'm actually preparing for deflation. I'm paying off my debts. I'm stacking some cash to do that anyway. Um, that said, I am sort of hedged for inflation too. I have my gold and silver. I have, you know, real estate that will be almost paid off. I have, commodity stocks and stuff like that. And I do have equity exposure. I'm not going to say I don't. I do. Um, not as much as I used to. Really, I used to kind of be almost all in on, I guess equities and yeah, I don't think I had any bonds at all. But anyway, yeah. So that's kind of how I'm approaching it, and I just think to myself, what's the worst possible outcome that would materially affect my way of life, my standard of living, and that by hands down is deflation. Um, which is why I made the choice. I've done fairly well with stocks in the past year. I sold, maybe a little, not quite at the top, a little early. You can never time these things right, but it's all about the kind of sleep at night feeling, right? I don't feel like I have to take a lot of risk, and I don't think you guys should either. These are just, again, my thoughts. Um, you don't need to go out on a limb, and I guess kind of the more, the closer I get to financial independence, financial freedom, the more I'm starting to realize that to win the game, it really is a marathon. It's not a sprint. um, I feel like you don't need to take a whole lot of risk and lose your shirt to do well financially, and all things in the end kind of revert to the mean. So if you live your life accordingly, if you get the small things right, you should get the big things in the long run. And at this stage, nobody is telling you to pay off debt. They're telling you to go gorge debt like crazy because we have these record low interest rates and they'll never go up, and all that. And I just don't believe that. I don't buy that for a second. I think a lot of people are going to be hurt. I think the smart thing to do is to pay off what debt you have at these low rates, so that more of your payment goes to paying the principal and not interest, because we could potentially see a rapid rise in interest rates. Um, in a deflationary bust, I mean, you could have sky high interest rates. even if we get like a lot of inflation, the central bank interest rate might be 1 or 2%, but I do think the commercial banks aren't going to be lending at that. They'll probably be up to 4 or 5, maybe higher. I don't really know. So, and again, it's like it has to do too, like with your payment, your overall cost of living. Like, a debt-free life is something that's really appealing to me, and I haven't always been this way. Believe it or not, I should really do a post on this, or like a video. In 2017, you can actually, if you go to my website, my Road to Wealth and Freedom, you can check out some of my old like net worth reports and stuff like that. And I actually owed, or I guess my family, our family household debt was over $700,000. I had a couple rental properties. I had a big mortgage on my primary. I had a line of credit that I was using to invest in real estate and in the stock market. I was levered up like crazy. And I don't know what it was. Like it didn't never really sat well with me. I eventually kind of unwound everything and kind of paid it all off. And, next year, probably by mid 2022, I expect to be completely debt free, no mortgage, no line of, no nothing, no loans whatsoever. We own our vehicles free and clear, our homes. And I just think like, in 5 years, we managed to pay off 700,000 or over 700. I think it was like 725,000 or something like that. And I mean, that was, it was a struggle, obviously. Like, obviously I had assets. I guess that's what saved the day, right? If you borrow money, invest in assets that are able to appreciate in value, it's okay. It's only when those assets kind of go the other way, it's only when the market moves against you, whether it's the real estate market or stock market, that, you end up like Archegos Capital and, you know, you're going down. So, yeah, that said, I'm just not comfortable with that. I don't know what it is. I guess I just realized that, what, it, building wealth is, is best done in a safe, sustainable way. That's sort of what I've learned. And I mean, I've tried all the stuff. I used to borrow lots. In the last financial crisis, I borrowed money and I invested in the most hated sector ever, which was financials. And those kind of bets paid off. And I'm not telling anybody to borrow money and to gamble it. Certainly, you don't borrow money and gamble it. But there is a time to do that. And in fact, I did that last March. So I'm not entirely opposed to doing it. My thought is that you need to have kind of a debt plan, like a debt management plan. How am I going to pay this stuff off? What if things kind of move against me? What's my plan B? And for a lot of people, the most amount of debt that they take out is to buy their own home that they live in. And they don't blink at all about dropping, $1 million on a home, having that huge mortgage, and they don't care about paying. And that's literally like, we've become this payment society where our homes are so overvalued. Our vehicles. I was like watching this, I don't know, or reading some article about, people who have had problems with like a Honda CRV or something like that. And they're saying like those things are like 40 some $1,000 for that. Like our vehicles are, we're paying top dollar for these vehicles that 20 years ago would be half the price. And the reason is it's all this payment. Like, it's like, oh, okay, you can borrow this money. You can have a car loan for 8 or 10 years and make a $500 a month payment, and away you go. And that's what people are doing. They're just, it's actually quite sad, because really you don't ever really own anything, and you're never really free of those payments. You're kind of mired in debt forever. And I feel like that is the game of this system, is to keep us indebted, to keep us, to like keep us from getting ahead. And unfortunately, it takes a lot of willpower nowadays, because they've done all these enticing things to make you think like make us think that we can afford things that we probably really can't and shouldn't. You know, I like, everybody now has kind of a high end car. You know, I remember back in the 90s where, everybody was driving like, a base model, Cavalier or Sunfire or Ford Taurus, like whatever. Now here we are. Um, Everyone's, driving these, the entry level Beamers and Mercedes, of course, all the SUVs, all the trucks with all their toys, and you know what I mean. You got to get the souped up truck, and you got to get the big oversized tires and do those lifts, and just spending like a crazy amount of money on all these vehicles. And for what? Like, what do you really get at the end of the day? Probably 10 years from now, those vehicles are all going to be in a junkyard somewhere, and they would have just gotten paid off, and then that person's on to the next new thing, a debt slave once again. So that's my video for today, guys. Hope you enjoyed these thoughts. I don't really see too many people talking like this anymore. I mean, they used to back in the day. I guess, maybe Dave Ramsey's still speaking about debt for that whole debt-free life and stuff like that, which I think is really important for a lot of people. Because a lot of people are incapable or lack the capital to be able to really hustle and to be trading and to be doing a lot of this stuff that we may need in the future to kind of just survive financially. So I really do feel like, the lessons of our ancestors have been lost. I remember my grandparents, they never used debt for anything. The baby boom generation kind of kicked it off a little bit, and now here we are where, we're just mired in this debt, and it's just sucking the lifeblood from the economy, and it's unsustainable. So I think you want to kind of, protect yourself, protect your family, do the right thing, have an emergency fund, own different things like stuff outside the system, and to really strive to be debt free. There's probably no greater feeling. I'll know what it's like a year from now, and I know how hard it's been to kind of get here. Yeah, so I wish you all well on this holiday weekend. If you haven't done so already, please like the video, subscribe to my channel, check out my website, My Road to Wealth and Freedom.